Yeah, it was a pretty tumultuous process, right? I came into the company about 4 months into the bankruptcy process, and there was a big fight over the valuation of the company because Bitcoin is volatile, Bitcoin mining returns are volatile. So the valuation of the company that you have to set 4 months before you come out of the bankruptcy process is challenging. And so we came out with a very unique capital structure that we've now solved for. We solved for it last August, or this previous month. And we've been able to clean up all of the litigation, all of our balance sheet, and put ourselves in a really strong position to execute on the high performance computing play that we have in front of us now.
Can we talk a little bit more about Bitcoin mining and data centers? Because, not to quote Harry Styles again, but it is a real sign of the times here.
Yeah.
And it's interesting. It sort of feels like how Facebook became Meta, but now they're really in an AI company, and Meta is sort of an afterthought. I mean, how do you identify as a business? Are you a Bitcoin miner? Is that how you introduce yourself? Or do you introduce yourself first with the data centers?
We're a digital infrastructure company. And so what we develop is very application-specific data centers. We've been developing them for Bitcoin mining facilities for the past 7 years. And now we're developing them now specifically for high-performance computing for artificial intelligence.
Why make that change?
Well, artificial intelligence and high-performance computing provides us with long, steady contracts with large counterparties. So we just signed 12-year contracts that total more than $6.7 billion in revenue over the next 12 years. So it really takes away the volatility and provides us the opportunity to make counter-cyclical investments into Bitcoin mining.
How much of your revenue now comes from Bitcoin mining?
Nearly all of it does today. And so
even though you signed this contract already?
Yeah, these contracts are for delivery in 2025 and 2026.
So what's the ultimate goal in terms of portion of revenue from Bitcoin mining versus high performance computing?
Yeah, so
if you can have that distinction.
Yeah. Well, we'll be developing these sites over the course of 2025 and 2026. So as we look forward to 2025, it's going to be a lot of high performance computing revenue. But as we look at 2026, 2027, it's going to be much more heavily weighted towards the traditional data center revenue.
I want to talk a little bit more about the mining piece in particular. Remind me when the last halving was.
It was in April of this year.
It was in April of this year.
Yeah.
That feels like a year ago.
Yeah.
So it was in April of this year. I mean, how do you handle the halving as a miner? Of course, for those listening who aren't super acquainted with the language, of course, the halving is basically when you have to solve a lot of puzzles and computer problems, and then you get Bitcoin as a reward as a miner, and then that reward is cut in half every 4 years. I mean, how does that actually impact your business? We talk about it all the times in terms of the price impact, but from a revenue standpoint, how do you handle that?
Yeah, so the expectation is that when block reward gets cut in half, difficulty drops, or how hard it is to find a block. In this previous halving, difficulty did not really fall off. And so mining revenue did get cut almost nearly in half in April in a single day. And so what we saw over Q2 was much more challenged mining economics. And we handle it a little bit differently than other companies because we developed our own software stack. We're able to have much more flexible energy contracts with our end providers. And so that provided us an opportunity to actually have our costs only increase 60% post-halving, whereas what you saw in the broader market, generally speaking, about 100% increase in cost to mine.
That's really interesting. And I mean, Bitcoin, the actual price itself has been interesting in that it's been really boring. I feel like we've been hovering around $60,000 since basically the end of February. What's the current?
It's like the ETF after the ETFs.
Yeah,
right?
we got the ETFs, and then we go up, we go down, but really we're in the neighborhood of $60,000. What is the current break-even level when it comes to Bitcoin price?
Yeah, so for us, we announced in Q2 our break-even Bitcoin price was about $29,000.
So you're having a great time.
Yeah, so we're still...
As long as the price is above 29,000, right?
Well, the expectation is if Bitcoin price fell, you'd see difficulty come off the network or network hash rate drop. And so you expect the break-even price to then drop in tandem with that.
I'm wondering about the infrastructure that you own and how easy it is to switch that from Bitcoin mining to high-performance computing. Is it impossible?
No, but it's not easy. It takes a very talented team. So much of our team comes from the traditional data center industry. And so the way our facilities were originally constructed was with the idea in mind that we're going to be able to convert some of these facilities to traditional data centers in the future. So our facilities look much more like powered shells with the opportunity to convert it based on the end specifications of the user.